Welcome to this AGM presentation 2022 for the Thule Group. I'm Magnus Welander, CEO of the company. I'm happy to give you an update of what was a very strange but also extremely successful 2021 for the Thule Group. And when we look at a year as exceptional as 2021 was in many ways, there are many things to take a look at, but what we should do is, of course, look at what the financial numbers came out to be. So looking at our performance, I can generally say we're extremely happy with what we achieved in 2021. Our sales growth was an astonishing 38%, and it's clear that a trend that has been there for many years, that people wanting to live active lives near their homes, was amplified and accentuated by the pandemic. As you could not travel internationally, you chose more and more consumers around the world to do a vacation or a staycation or a weekend trip or even an afternoon, evening trip to do some activities nearer to your homes. With our product portfolio, that meant that we had a perfect mix of products for the type of activities that were pursued. And not only did we have a perfect mix of products, we also did a better job than most of our competitors in meeting that demand growth. As we all know, 2021 was a year with many challenges in supply chains for all companies, also us at the Thule Group. But we did a better job than most in still being able to get products out. Despite longer lead times, despite issues with capacity, despite many challenges and disruptions, we did a good job in capturing that upside with increased demand. That good job at times was at the detriment of our gross margin. We chose simply to still ensure we could get supply of components and at times therefore had to pay more to get those components. And as we are all aware of, also 2021 was a year with extreme material cost increases and freight price increases. So that meant that the year we did a very strong job in being able to still deliver a fantastic EBIT growth and an EBIT margin of 22.5%. The operational cash flow was also extremely strong in the year, and that was despite the fact that we, towards the second half of the year, chose to start the ramp up in being able to better fulfill demand in 2022. Because despite, as I said, us doing a better job than most of our competitors in meeting demand, we did not satisfy the demand with the same high on time in full next day delivery that we historically have been so good at. Meeting that capacity increase meant that at times in 2021 we had to have much longer lead times, and therefore we now took the decision then towards the end of the year to start ramping up both capacity-wise but also inventory-wise in being able to have a better service level in 22. Also knowing that now, 2022, there will still be extremely long supply chains, much longer than historically, and also more disruption than ever in the supply chain. So a higher inventory level during the year was a clear plan, and therefore ending 2021 with a higher inventory level. Overall, therefore, very strong results, which then yielded the opportunity as for today's AGM, the proposal for a high dividend of 13 Swedish krona per share. So overall, a very strong financial result for the year. But not only financially, I think also that we are known as a company that have focused on sustainability measures for many years. And as having signed up for the ambitious Science-Based Targets Initiative for the 2030 agenda, we clearly have worked hard in order to also get all of our emissions, waste and water treatments done in the right way. I'm very happy to say that we were able to reduce our impact in terms of emissions per million Swedish krona revenue significantly throughout the year. But we have to admit that some of the choices we did to meet the demand also meant some impacts in terms of less efficient freight, because being able to fully meet demand, we had to ship out in many more shipments as we were struggling with the efficiencies normally had. We had to also carry out various measures in running overtimes, etc. And some of those things did have a negative impact on the total emissions. But overall, as you can see on the graph, a very strong results in reducing the emissions per million Swedish krona in revenue. 2021 was also a year when we announced in April new financial targets. So let's have a look at those targets. What we decided to do was we clearly had been delivering a more than 7% CAGR growth for many years since we got stock exchange listed, in fact. So therefore we presented a long-term target to continue at that rate, thereby enabling us to double sales by 2030. We also stated that we would continue to maintain a very high profit margin with above 20% EBIT margin level. And we also increased our dividend target goal of minimum 75% of our annual net income. So strong commitment to aggressive financial targets and an even stronger commitment to the sustainability ambitions of meeting those highly set targets for science-based targets reduction of greenhouse gas emissions, plus several other measures in our long-term sustainability efforts. I'm very happy to say that 2021 was of course a great start to all of those, where we clearly beat the CAGR sales growth target with our 38% growth. We kept a very high EBIT margin at 22+, and we do have a net dividend that is more than 75% of the net income. And as I said, some improvements on a sustainability effort, but still a long way to go towards our long-term objectives. If we then look a little bit more of what happened in 2021, it is clear that our business, as I said, had product categories that truly benefited from what went on in the pandemic. We also had some product categories, smaller ones for this group, that were the opposite end of the scale, that actually were hit hard by the pandemic. So let's look at how those product categories then developed in 2021. If you look at our share of sales and what the growth was, we are clearly still the biggest category for the group is where we came from many, many decades ago, the sport and cargo carriers, the various solutions on your car to enable you to bring the gear you want on your trips, on your vacations, or just simply bring the bikes home after picking up your kids after a practice. So that business, 67% of our sales in 2021 and a fantastic 43% growth. The biggest growth we've had since I joined the company 17 years ago in this category. Clearly helped and boosted by the pandemic, as I said. Here we see a true example of many people either feeling forced to or wanting to pursue travel and activities close to their homes and using their car as a vehicle for that. 14% of our sales was the RV products, and there we saw a 34% growth. The vast majority, more than 95% of our sales in this category, is in Europe, and you can generally say the whole motorhome market had a very strong development in Europe, but we outpaced that growth significantly, continuing to win market share as we've been doing for more than a decade. Within Active with Kids, 12% of our sales in 2021, we had 35% growth with a very strong boom in bike commuting with your children. Our strong portfolio of bike trailers and bike seats, of course, did well, and we kept on taking market share and growing in strollers. And then last and least, we had the category of packs, bags and luggage, 7% of our sales. This was a category that was struck very hard in 2020 due to limited travel. It did pick up with a 12% growth in 2021, but that was still below the levels of 2019. From a regional perspective, we see that 72% of sales is in region Europe and rest of the world, where we grew with 34%, and 28% of sales is in region Americas, where we grew with 48%. So strong growth in both regions, although even better in region Americas. When looking at then what we're about to do in the future and looking at sport and cargo carriers, we can say that the market trend is a long-term trend that has been there about people wanting to be active, having busy city lives and white-collar positions, sitting still at work. They want to be active and outdoors. This was already a strong trend before the pandemic, but of course greatly boosted in the pandemic. And we also, as a brand, have been launching better products than our competitors, and we've serviced the market in a fantastic way. What we have to be realistic about, of course, we cannot expect this type of potential growth that we've had the last 2 years to continue. We would probably see it as much more realistic that the market, and we ourselves as the strong market leader in that market, will grow at similar pace in the coming years as we did before the pandemic. And here our long-term strategic ambition is continuing to strengthen our global number one position. When we come to the RV products, we clearly, as I said before, outpaced the European market growth. And we did grow in our small niches with smaller vans in Americas, in the US specifically. And here, clearly, we see an ongoing trend with an older generation, people my age and older, 55 plus, wanting to live those active lives and traveling around in the freedom that a motorhome gives, but also a young group of young couples and young families wanting to pursue those activities and bringing all their gear with them in a smaller van. Here, where our ambition long term is to continue to outpace that European RV market growth and to continue to win in those relevant market niches in North America and Asia. When we look at that outpacing of the European RV market growth, the biggest challenge in the short term is the lack of chassis that the RV manufacturers are seeing currently in Europe. That is no news for anybody interested in the vehicle industry, either in trucks or cars, but the lack of semiconductors have led to that chassis are not being manufactured at the pace that the demand sits in the RV world. If we look at with Active with Kids, the bike commuting boom has lifted the category, and our entry and broader portfolio in strollers have of course helped us as well. We believe that the bike commuting trend will continue, not with the same type of growth numbers as we've seen in the recent 2 years when some parents have almost felt forced to do the bike commuting rather than taking the bus or the subway. But clearly, with huge infrastructural investments going on in a lot of cities and municipalities around the world for bike commuting, we believe that a lot of parents will be continuing and this trend will continue to grow. On top of that, as I said, us taking focus on energy into driving a broader portfolio in strollers and becoming a bigger player will also help us to grow this category in the long term. And finally then, within packs, bags and luggage, we have to admit that it was a weak 2020, so our growth in 2021 was not as impressive from that point of view. But what is very nice to see is that we did win market share in the more technical outdoor packs and the hiking packs, and in products like bike pannier bags and bike commuting. And that we now believe that in a very challenged market where the whole industry has seen a tremendous drop due to much less international air travel and less commuting back and forth to work and universities, as that market now picks up in 22 and beyond, there will be some brands that won't be around anymore because of the challenges they have faced and lost the business they've had. And our strength and ability to play in this category will therefore be helping us as the market now grows in 22 and beyond. So looking at then what this means for us as a company where we stand today in April 2022. We stand in a good position with long-term trends helping us. Long-term trends that are clearly have been truly boosted by a pandemic and won't be growing with the same percentual numbers as in the recent 2 years, but that we believe, and many people in the overall outdoor arena believe and the biking arena believe, there will be a continued trend from a high level in the coming years with a growth similar levels as those growth numbers were potentially before the pandemic. So therefore, looking at what is our main focus for 2022, the main focus is clearly to be long-term. We've said many times, and I've done that since we became a stock exchange listed company in 2014, that we are not a quarterly focused company. We are a company focused on the long-term direction and the sustainable growth for the company, which means that currently we are undertaking the biggest investment efforts ever in building out capacity for what we are convinced will be a long-term growth. Part of those investments are related to needing to capture and catch up with demand that we already had to quite inefficiently serve with less good on-time in full service delivery. So we're investing in capacity. We're also launching in a lot of new products, so we're continuing our deep efforts and big efforts in driving product development. We're continuing to take share of the business with our Thule branded products and building that lifestyle brand. We're continuing to work more efficiently with our retail partners in supporting them both in an online and in a brick and mortar reality. Our fastest growing channel will be our own direct to consumer, and that will of course be beneficial for us. And on the total, we will continue to utilize our strong, well-invested back end of the business to ensure that that top end growth also delivers strong profits. As I said, product development has always been key to the company. We will continue to spend around 5% of our sales, and I'm extremely happy to say that we, this month in April, opened our new fantastic Thule test center facility in Hillerstorp, an 8 million euro additional expansion of what was already a world-leading test facility, which is now located next to the very brand new Thule Development Center that we opened last year. Fantastic location with more and more staff working in product development. And then, as I said, supply chain is a very challenged reality for any manufacturing company at the moment. Costs are continuously being challenged and going up. There are huge delays and long lead times, and there's constant small disruptions. You've all heard about semiconductors and other things, but I can tell you in reality, on a daily life, it's a struggle of any type of material. It could be a small fastener, it could be a cardboard box, it could be anything. What we have done better than most is that we have been quicker on our feet, enabling us to cater to that. But of course, we need to build out capacity both with our suppliers and with our own assembly plants so that we can do that more efficiently and better servicing the market in the coming years. In the end of 2022, the biggest question will of course be what will happen now with things that nobody foresaw. The Russian invasion of Ukraine and the impacts of that, inflationary things that are happening. There are so many uncertainties in the short term. As we look at the long term of the growth of this company, we feel very certain that we have a long-term growing trend on a very stable and larger foundation than ever. And then we need to be quick and nimble on our feet, enabled to handle all those various challenges that there evidently will be in 2022, but also those opportunities that will arise in 2022. So with that, I want to invite you all to either physically join us or digitally join us for the exciting Capital Markets Day that we will hold in Hillerstorp in Sweden on the 11th of May. At that Capital Markets Day on the 11th of May, we will introduce 2 new product categories that will be starting to sell products in 2023. So welcome and thank you for listening.